In this video, I'm going to talk all about retirement accounts. And by the end of this video, you will have a really clear idea on where you should be putting your money for retirement. So I'm going to talk about retirement accounts in two different classifications. And the first is for Roth IRAs and for Roth 401ks. Now, I want to clarify this item on Roth 401ks just a little bit. And that is because many employers give you the option that you can either make contributions to your 401k as a Roth contribution or as what is called a pre-tax contribution. So when I have this part up here, Roth 401k, I'm talking about the option that many people can choose when they put money into their 401k plan. The second area is about IRAs and traditional 401k contributions, or again, that's pre-tax money going into a 401k. So here's how these two different categories are different. With a Roth or a Roth 401k, you do not get a tax savings right now, but you do get a tax savings when you go to retirement. In fact, when you go to take money out of these accounts at retirement, it comes out 100% tax-free, which is great. Whereas with the IRAs or the after-tax contribution to a 401k, you get a tax deduction now, which is great because it lowers your taxes now, but you don't get that tax deduction in the future. So there's no tax savings in the future. When you go to take that money out, a considerable percentage of it is going to be withheld and paid to the IRS for taxes. I like to see people have money in both of these types of assets, both in Roth types of assets and in pre-tax money in an IRA or in a traditional 401k. And that is because one of the greatest factors in determining which of these buckets is going to make the most sense for you is where your tax rate is going to be at in retirement. And while we could guess that it's probably not likely to be any lower than it is right now, we don't know that for sure. And so it's really good to have this diversity of having both some Roth assets and pre-tax money. So often when I see people come in, their bulk of their money is in this. It's in the money that was pre-taxed, where they had the tax savings when they put the money in. And for that reason, a lot of times it makes sense to build out this Roth area. So I want to talk about a few things a little bit more specifically for this Roth area. First of all, as long as your 401k plan or your retirement plan at work allows for you to make this Roth 401k option, and most of them do, I recommend that you go with this, especially if you're under the age of 50, which most of our clients are. Now, just so you know, when you do that, you're going to be giving up some of your tax benefit now, but I promise you it'll pay off in the long run. And so I recommend you consider this option. One thing to know about the Roth IRA, though, is that the IRS sets income limitations for people who can make contributions to this. So people can contribute $5,500 a year to a Roth IRA. However, if your income is over $194,000, and that's your joint adjusted gross income, so when you're going to do your tax return, whether you're using TurboTax or an accountant, it will be able to tell you what your adjusted gross income is. And so if that's over $194,000, you are not eligible to contribute to a Roth IRA. If your income is under $184,000, then you're eligible to do the full Roth IRA contribution. And if it's between $184,000 and $194,000, it's a slided scale, so you're not able to make the full contribution. So that's just something to watch out for. The other thing to keep in mind is that there is no income limitation on the Roth 401k. So if your employer allows it and you can make a Roth 401k option, it doesn't matter if you make $1 million a year, you are still eligible to do this. The other thing to keep an eye on with this bucket is that the most that anyone can put into their 401k is $18,500. There are very specific rules about if you're able to put money into an IRA as a pre-tax contribution. And it doesn't make sense for me to go over all the iterations for this. We'll post a little table that shows you, but it depends on if you and or your spouse are a participant in a retirement plan at work. And then it also depends on your income level, if you're able to also make a pre-tax contribution to an IRA. So those are a lot of things to think about when you're looking at, should you do Roth versus IRA, and those types of contributions. Again, my recommendation usually is to go a little bit heavier on the Roth contribution, but in some situations this might make sense as well. Again, this would be a great thing to talk to me about in your one-on-one call so I can get really specific to your situation.